Hi, and welcome to the Day Trading for Beginners podcast. This is episode 4, and this is going to be the last episode before we jump in and actually take some action and move towards our goal of becoming a full-time day trader. So in the previous episodes, we talked about our blueprint and our plan for becoming a day trader in the first 6 months. So in this episode, what I want to do is just talk about some common day trading pitfalls that we want to be aware of and we want to avoid as we embark on this journey to become a day trader. So again, this is pure research. I'm a pure beginner. You might be a pure beginner looking to start day trading. So what we're going to do here is kind of get familiar with all the mistakes and the things that we should not do in the first 6 months or when we're starting out to become a day trader. So again, in the previous episodes, we talked about what we need to do. Now we kind of want to talk about the things that we need to avoid, like what are the common, mistakes that beginners make. And I think that knowing what not to do can be, just as important as knowing what to do. And this is, especially true because many of the things that you shouldn't do are really kind of tempting to do. And it's often, the hard things you must do, but it's the easy and the addictive things that you must not do. Probably when doing day trading, and especially when doing, any type of online business or building, your own business. And I've kind of experienced that in the past with things that I've done with affiliate marketing. The easy things that are tempting to do are really, what you really need not do. Instant gratification, constant dopamine hits and all that kind of stuff that gets addictive. You kind of need to scratch that off and avoid that and do like hard, focused, kind of boring tasks over and over. So that's what we want to cover in this episode. So let's check them out. So here are the things that I've researched that you really don't want to do in the first 6 months. So the first point here is avoid real money trading. I think this one is probably really hard for a lot of people. The barriers to entry into day trading are very, very small, just like starting an online business. I talk to beginners all the time that start affiliate marketing. The barriers are really small and they kind of go in the wrong order. Their expectations are too high. They want instant gratification, and it certainly does not work out. So avoiding real money, I think a lot of people don't do this, but it's probably one of the most significant risks for beginners is to trade with real money too soon. The first 6 months should be dedicated to learning and practicing with a paper account, so a virtual account or fake money. That's what I'm personally going to do. Next point, don't skip the basics. So rushing through or maybe overlooking some foundational knowledge of the stock markets, trading principles, and day trading specifics is probably something you shouldn't do. It's certainly something that the research that I've done is telling me not to do. So, in the first few months, which my 6-month blueprint sort of outlines, I'm going to learn the basics, get a refresh on the stock market, trading principles, fundamentals, all that sort of stuff. Next point, avoid overcomplicating strategies. So beginners often try to implement complex trading strategies that they don't fully understand. So I think, once we get to that stage, maybe, later on in the first 6 months when we are kind of starting to look at day trading strategies, you probably don't want to overcomplicate things. I've already seen many recommendations on keeping things really simple. There's, a ton of things called trading indicators that you can kind of track. But when you start to overcomplicate things or you start to do more market analysis, sometimes too much information can be unhelpful. So certainly that's a point that is recommended here. Stick to the basic strategies until you have a more in-depth understanding. So keeping it simple is going to be important. Resist impulse trading. So avoid making trades based on emotions or hunches. Every trade should be part of a well thought out strategy. So I've seen that point many, many times. People get emotional. I can see it happening. You have that gambler mentality or some of that instinct when it comes to trading with money, and you just kind of want to recoup your losses and double down on your bet, so to speak. Certainly a recipe for disaster. Okay, here are some common mistakes that beginners make. So we just talked about, what not to do in the first 6 months. And here are some of the mistakes that beginners make that we need to avoid. Firstly, lack of education and preparation. So if you jump into trading, without a solid understanding of the markets, the principles, risk management, and so on, you're probably going to lose money. I can see many people probably do that. We are not doing that. My journey starts with a good grasp of the foundational things that I need to learn. And again, I'm not rushing this at all. Another common mistake, over trading. So this occurs when traders make too many trades in an attempt to capture all market opportunities. So that's a good one to note. We don't want to do that. Ignoring risk management, so not setting up stop loss orders or risking too much. So I think once we start trading, we're going to do everything properly. We're going to trade very small amounts, even in our paper account. We're going to set up stop losses properly. We aren't going to chase losses, and we're going to understand that we can't underestimate emotional factors. I think even for me right now, looking at this, I kind of have this mindset like, I'm not going to be an emotional trader. I can see that a lot of people make mistakes doing emotional trades, and I'm not going to do that. But I think I need to realize that it is probably harder than it seems. So for me, just to say I'm not going to put my emotions into it, I might need a reality check and understand that even just saying that is not as easy as it seems. Many beginners, I think, based on my research, they are unprepared for the emotional stress of day trading, which can lead to panic selling, greed-driven decisions, and all of that sort of stuff. So really kind of understanding and being self-aware that your emotions are going to affect you as a day trader, especially when you're a beginner, I think is important to understand. Okay, so here are some reasons for losing money and quitting based on the research that I've done. Unrealistic expectations. So right from the beginning, I think I've had really good realistic expectations. I'm not looking to become a day trader in 6 months. I have a long-term time horizon for this. But, from my hunch when I just started and from the research I've done, beginners, I think often they want quick and easy profits. And that just doesn't work. It doesn't work for my personal business, affiliate marketing. People want to make $10,000 in like a couple months. That's not going to happen. And with day trading, certainly, I don't think that's going to happen either. Inadequate capital management. So without proper money management techniques, traders can quickly deplete their trading capital. So I think that's more of an advanced topic. When you kind of look into trading with real money, you're really going to want to understand many of the concepts associated with risk management. Failure to adapt. So the market is dynamic. Beginners who fail to adapt their strategies to changing market conditions often suffer losses. So this is kind of full circle back to this 2-year timeline where, if you're in a bull market and everything is going up, everyone tends to make money in a bull market. But you need to kind of expect things to change in the economy over several years. And that's why it's probably going to take you more than 6 months or a year to be a successful long-term day trader, because you're going to need to face all sorts of market conditions that might happen over, a multi-year time frame. And then lastly, ignoring market trends and signals. So beginners may fail to recognize or understand significant market trends and signals leading to ill-timed trades. So that kind of has to do with technical analysis. That's something we're going to look at around the 6-month mark, or the 4 to 6 month mark, somewhere in that range. We want to really have a good grasp of technical analysis, and then we want to trade in a paper account and test everything out that we are learning. So I think the bottom line with all of this is that, what I'm personally going to do is I'm not going to focus on profits in the first year. So by focusing on education, practice, risk management in the first, 6 months, and avoiding the common pitfalls that we kind of listed here, I think that's going to be the best plan for building a strong foundation for becoming a long-term successful day trader. So the goal in the early stages is to learn and develop skills, not to make profits. That's the mentality that I have going into this. So the main things personally that I'm focusing on after reviewing, these common pitfalls, mistakes, and whatnot, is spending, many months learning some essential information. No real money trading, probably for at least a year. Depending on how things go, that might stretch out a bit longer, or things might go really well, and I can kind of reduce that. But I'm not looking to trade real money anytime soon. And then having realistic expectations. I think I have those, and I've been discussing those as well. So what I would recommend that you do is subscribe to this podcast, but really go back to the previous episodes where we talked about the 6-month plan, and I'll have a link in the show notes of this episode for you to go and check that out. So again, we talked about what not to do. Review the 6-month blueprint plan that I'm going to be following, because then that's going to tell you exactly what to do. So I think it's important to understand what not to do and what to do to become a successful day trader. And in the future episodes, we're actually going to start taking action, learning and reviewing some of the basics, some of the fundamentals of stocks and various other trading concepts. So subscribe to the podcast. Thanks so much for listening, and I will talk to you in the next episode.